Hello traders, this is Thomas. Another recap is ahead of us, and yesterday, on Monday, I only had one trade. It was in Under Armour, UAA, and my trade was short under 9. If you take a look at the daily on the left top corner, the stock was trending higher for the past 2 days, and on Monday it dropped at the whole number to 9, which was coincidentally also a previous swing low. So the reaction to breaking 9 was, in my opinion, a great opportunity to make some profits. So now if we take a look at the 2-minute at the bottom right, it opened at 9, went up some 30-40 cents, but it was rejected. The higher prices were rejected, and it then consolidated for a bit. So an early entry could have been made at 9:07 at the break of this candle right there, but I played it a little bit safer, so I placed my order at the break of 9. So I got filled at 8.98 right there, and my stop loss was 9.25, and my profit target was just above 8.5. So you can see that. Let's do the comparison with the S&P, which is what, as an intraday trader, you should take a look always when you are trading. And there we go. So the S&P was pulling up. Under Armour was consolidating. So then when the S&P dropped a little bit, it helped Under Armour to get under that 9 level. Now it dropped some 30 cents. So if I was a one-to-one trader, I would have gotten my target right there. But since my risk management and money management is 2-to-1, I did not take any profits there. And I was curious to see what would happen, because it already at the beginning of the day showed me some weakness and the willingness to go down. So I was pretty confident it would hold. And it did. When the S&P made a new high, the Under Armour did a flip from the 9 level again, so that was a confirmation of weakness, and I was pretty happy. So then it did a low of 8.62, which was just 10 cents shy of my target at 8.52 that I set to my platform. And that was sadly the lowest low of the day. And then as it happens with stocks like these, it didn't have enough strength to go for longer. So with the S&P not doing really anything, I lowered my stop loss to 9.07, I believe. And I was prepared to give it another shot. So if the S&P after that point didn't break upwards and instead continued or even went down again, I'm pretty sure that Under Armour would have gotten to my profit target. But the way it traded the S&P, I mean, it wasn't really helping anymore, and at the end of the day, I got out at my altered stop loss at 907. So I lost about a third of a percent. So at least I didn't let it go all the way. So, again, I could have been mad, but this is the risk with the 2-to-1 management. At times you gain much more that you would have if you would have used 1-to-1, but at times like these, you end up slightly negative, even though your call was correct. So that's one thing to keep in mind. You have to judge your risk management strategy over a longer period of time. You cannot just switch every day, because that way you will be constantly switching and probably ending up worse than if you weren't. So that was Monday for me. If I held until the market close, I would have been at break even or slightly better or slightly worse, but that doesn't matter that much for me. So just one trade. Again, looking forward to today's session. If we look at the S&P, it is up slightly from the yesterday's close. So we will see if it will attack the intermediate highs, which are around 295, I think. And we'll see what happens. So thank you guys for watching, and see you in another recap.